Hey guys, welcome to Edge Trader. Um, this is going to be my first ever video I'm making, and I want to create something that everybody will benefit from. So that's why I'm creating this channel to start something new. So our first video is going to be talking about what I'm exactly going to be teaching to you guys and what exactly we're going to be talking about. We'll talk about the psychology of trading. We'll talk about maintenance and also why questions. A lot of traders has questions that we're going through our head, trying to know what exactly is going on. They don't get profitable. So in this video, I'm going to be talking about why traders fail and why they cannot get consistent over a certain period of time. So most traders don't feel because they lack strategy or anything. It's just they feel because they cannot follow simple strategy that they already understand themselves. So if you're watching this right now, you probably already know about money concept, SMC, and you know about structure, you know about order block, you know about liquidity, and you know about other aspects of the market that are out there. Because I don't want to go deep into all that aspects. I believe by now everybody should understand that if you know you want to become a very profitable trader. So I'm going to explain why. Why? That's just going to be the main purpose of this video. Now, one thing about SMC, you cannot just use SMC alone. SMC has some outside factors you have to consider, which is you, your discipline, and your right psychology. So you need to execute them correctly. You get if the market doesn't punish ignorance, it's going to punish your emotional behavior. So we'll move into the first aspect of that now. We'll talk about SMC illusion. We all know what illusion is. False belief. So it's not as if SMC doesn't work. SMC works perfectly well, and market structure is real. Liquidity also works, but knowing SMC is not really the same as trading SMC. So most trader before they enter a trade, sometime they already take for example now you have a setup like this. I don't want to dive into setup, I just need to draw something out so I'll make you guys understand what I'm saying. Okay, we have this style setup and you're supposed to take the entry at a specific order block. But after the breakup structure, due to your psychology and probably there was a breakup structure around this zone, and you do not want to miss out the trade, right? What most traders will do is that they will take the entry at this zone, which is not supposed to be, thinking it's a value to that block, but it's just liquidity that's about to be taken out. So if you're not in your right state of psychology and you have FOMO, you have fear of missing out, you have the fear of your entry being stopped out, all those factors will lead you to act impulsively and not execute your trade right. So There is one thing about market illusion we have to clarify, and one of the most common issue every trader has, or every trader has to clarify later on once they become aware of it. They stop to move emotionally. Once you can stop to move emotional, see one thing about trading, if you come to trading like a robot, it is better because you're not thinking, you're not doubting, you're just purely executing. So that's the mindset about trading. You kill emotions and you move with analysis. So trading a heavy setup too, instead of just your original setup. Take for example now, you know that the market wants to break below here, then you want to take a sell. You want to take a sell that is going down here. So you're not thinking that okay, probably the market will make a little bit of consolidation before it starts to go back down to break this liquidity. Yes, it can work. It can work, but sometimes the market can be crazy and it will stop out a lot of people trying to sell at this point just to get profit for the sale. So you stop them out going down and originally just going to the original direction in the first place. So understanding this, you have to just stick to your plan. So do not go out looking for sales, looking for the direction of the market. Take it like that. You, if market direction is going in an uptrend, you take it like that. Either it's going in an uptrend or in a downtrend, take it like that. If you do not, you do not, you do not sell when you're in an uptrend, that's literally going against the market. So you focus on buy entries when you're dealing with a uptrend, then vice versa when you're dealing with a downtrend. So that's understandable for that. Now, another concept I need to explain is you enter after you've confirmed your trade. If you enter, you can enter the market before confirmation, but having confirmation gives you that edge in executing your trade. It makes you more confident in taking your trade. So all the thing I listed right now, I listed removing your emotions or being emotionally detached from the market. So detachment is one of the factors of market illusion, or the opposite of this instead. Attachment to markets cause you to act impulsive. So you focus on an A plus setup, that just one setup, execute your trade right, and do not look for other factor you're not supposed to look for because you will get confused later on. You need to avoid over trading too, because sometimes we all want to revenge trade. Oh, I lost my setup, so I must get it back. You're just gonna be on you're just gonna be on that loop of trying to get your money back, but in the end you end up blowing your account. So you enter before confirmation. So you enter after confirmation. That was a mistake. And the last one I we talked about too is, okay, I think this is four of them we talked about. We're only going to talk about four for now. Then we'll move to the next section. We are going to be explaining market structure breakdown. So, with all this in mind, you guys should know that it is easier for you to set your psychology first, then you move into market structure. So now we'll go into knowing market structure. So I want you to look at, no, let's make a chart instead. Now, with the chart I created before, right? I'm going to be using another example. So if you know a market is making a move like this, market is making move like this, the impulsive move, then what you're expecting is correction move to form a retext to the upside, causing a break of structure, right? That is your original plan. So what most traders do, eh, they enter early because they are afraid of moving out, of missing out, or they enter because they are hesitating after they know the market wants to make a retracement to probably a level, either a favor lookup or another block or something else that has to be retraced, or the Fibonacci retracement levels, whichever one. But due to the fact that they don't either miss the trade or they are hesitating, they they lose clarity and they lose discipline. So that aside, I need to make you guys understand why discipline is very important and why it cannot fail. So discipline doesn't fail because you're weak, and it fails because your brain is wired for survival, not probability. You know, the world we are in today has a lot of um, consumption rate that is so high that everybody just wants to survive. So the brain is not fully wired on possibilities, outcomes. The brain needs constant stimulation. That's what keeps us alive. That's what makes us feel. So the mind eats waiting. It doesn't have patience because everything right now in this world is just about getting it now, getting it now. So getting it now mindset is just going to keep you on this being very very impatient. So the mind also hates uncertainty, things you're not certain of, the unknown. When you don't know what's going to happen, the mind goes crazy. So your job is to, as a trader, you force entries, not based on what you feel, but what you've analyzed. So you tend to avoid over leveraging, and then you don't take random setups. Don't just take random setups just to make money. And so okay, so we'll be talking about the real edge now. So the real edge is not your indicator actually, because I've seen a lot of traders, mostly retail traders, they use indicator in their trade. But market speaks. You just have to listen to it. That is when your real edge will come. With a lot of back testing, you'll be able to understand what the market have been saying and will say. So building your real edge through back testing and forward testing To give you that ability to wait for confirmation, you'll be able to accept loss without emotional reaction because you know what you're doing. The trade becomes aligned, or your trade becomes aligned. You start to see clearly because you are listening. You're not just moving in the market randomly, checking people tweet. Oh, this one said this one said that, so the market is going to move in this direction. It is all about what you know and what you believe. If you know what you're doing, you will get that clarity once. Sorry, I want to check. I'll be back. Okay, so once you realize all this, you understand that psychology is just it's just the vehicle for your movement. So the price, it doesn't really move when you want it to move. You get, since you're not the owner of the market at all. You do not own the market in any way. So I'm gonna make out a little structure here. Okay, this is another example. We'll dive into all this later on in another video, but I need to clear out some things first. So this is about taking out some liquidity. In any trade, if your trade does not take out liquidity, do not enter it. You have no business with it because what moves the market is purely liquidity. This is a breakable criteria. So it's purely liquidity. That's why professional wait. So your job is just to observe and execute. So that for that, I believe you guys understand some things now. And in our next video, we'll be talking about um smart money concept, but in a practical way. We'll talk about market structure deeply without confusion and your mental discipline that's to help you in leveling up your game. So until next time.